Joining us now with his outlook on the streaming giant, Propagate Content co-chair and CEO, and former NBC Universal Entertainment co-chair, Ben Silverman. Ben, it's great to talk to you. Wall Street, leading into this report, has been giving Netflix a ton of credit for being kind of the undisputed leader, having basically everything that it would take to withstand this tough environment, the head start in streaming, the amount of content they have in the tank to go against the writer's strike, and just in general, this pricing power and a new ad tier. So did anything change in all of that with what we heard last night from the company?
I'm a content creator, not a stock expert, but I read those numbers and was so impressed. I mean, I see 5.5 million, 5.8 million subscribers added, and I see, just a giant business with over 223 million people paying every single month to subscribe to the service. It's, bigger than, multiple Super Bowls every single week watching the service. So I'm impressed with the platform. They're profitable, and they are a great partner to supply as a producer, creator, and production company. And I do think between their huge international programming accelerant and lead, and so many of their subscribers coming from areas with giant populations that are only growing, like the Middle East and Africa, that they still have a lot of runway and are still the undisputed king. And they also have a balanced platform in terms of they went early into documentaries. We make the Untold franchise for them, which is an incredible series of documentaries. They make, non-scripted formats. They make scripted shows. They make Korean dramas. They make Indian dramas. They make American sitcoms. I mean, so there's so much inside it and the ecosystem. I can't speak to a stock going down 10% after going up 62%, because 62% seems like a lot to me.
No, for sure. There's no doubt about it that most of the story, at least as the investment community sees it, remains intact. I do wonder what your assessment is right now, though, of the overall streaming economy at this moment with this strike, because all the competitors are struggling to one degree or another. There seems to have been this period of overspending, overproduction, and now reality is requiring maybe some discipline on production. Maybe the pie's not going to be as big. Whether that helps Netflix or not, how do the other competitors navigate this?
It's really bad, honestly. I've never felt that before in the history of my being in the content business. It's the first time that I've seen a real retrenchment. And I'm also watching as players in linear cable are being really hurt, and in broadcast are being really hurt, coupled with advertising market that is softened and is softer than it was in previous years. And it's a lot of issues that are faced by these providers and the high level competition they've entered with each other. That being said, there's still so much appetite for great content and so much opportunity. And I look at how the cable systems kind of got debundled into all of these different streaming platforms, but my monthly bill has finally caught up to my old monthly bill, and in fact surpassed it. And that was not what one of the goals was in this next iteration of content distribution.